Good morning, ladies and gentlemen. We are at the booth of Stockhouse here at the PDAC. It's day 3 in the morning, and with me a totally new company to Commodity-TV. We have Blake Steele here, the CEO of Azarga Uranium. Welcome and good morning.
Good morning, and thank you for having me today.
Yeah, great to have you here. We just met by coincidence. I like that. That's always good. Maybe you give us a short overview. What is your company doing? Where are you based?
Absolutely. Azarga Uranium is a development stage company listed on the main board of the Toronto Stock Exchange. Our ticker symbol is AZZ. We have a portfolio of 6 projects. Our flagship project is the Dewey Burdock project located in South Dakota.
South Dakota is in the US,
South
of course,
Dakota,
yeah.
United States, correct. And Dewey Burdock is the highest grade in situ recovery project of our peer group. And why I point out in situ recovery is it's very important to understand that in situ recovery projects in the uranium space have the lowest cost profile.
Okay, fantastic. Great. So how far is your project developed, I would call it, yeah? I mean, you have exploration phase, yeah, but you told me already that you are going now into the development phase. So you have, of course, a resource. Maybe you can elaborate a bit on that. Give us some grades. Is it shallow? Is it, how deep is the resource?
Yeah, absolutely. So Dewey Burdock, the flagship, we have a preliminary economic assessment that has been completed. It's a first quartile in the cash cost, $27 million of initial capital expenditure required to put that into production.
How much?
27 million. So that is very,
nothing.
very cheap. And that's what's important about in situ recovery assets relative to conventional assets in the Athabasca Basin.
Yeah.
From a cost perspective, it is sector leading. So, in terms of where we are in the permitting process, we've received our Nuclear Regulatory Commission license. We've received our draft EPA permits, and that just happened in 2017, and the state of South Dakota has recommended the permits for approval at the state level. So we've advanced the project significantly over the last couple of years, and we're working to finalize that moving forward.
So but what are your grades then? Like?
So the grades, I mean, relative to what you'll see in the Athabasca Basin, grades are not as important in the ISR equation.
But you are a totally different setup, of
We're
course,
a totally different setup, exactly, because in situ recovery, effectively you're not moving in any material, you're mining in place. So you're injecting a lixiviant solution that is water, groundwater, in which you add carbon dioxide and oxygen. So you're effectively injecting that solution into the ore body, and that pregnant solution is then pumped back to the surface. So it's not a conventional operation where you're moving material. You don't have a big open pit mine. You're not drilling mine shafts.
Exactly.
So it's much cheaper from an operating and a capital cost perspective, as well as it's much more manageable from an environmental perspective, which is important.
That sounds to me like the same like what UEC is doing, right? It's ISR.
It's same finally. Exactly. Same as UR Energy, UEC, same as those companies in the US.
So it's also standardized. It's no rocket science.
50% of production in the uranium space is in situ recovery.
Yeah. Fantastic. Okay, so what is the work program for 2018 then? What do you want to achieve, and when do you think you might be in production? I mean, the uranium prices are still a nightmare. Yeah. So, but I would assume your costs are not that high as, let's say, conventional mining.
No, absolutely correct. And we've actually had some exciting discoveries recently. We've identified additional mineralization at our flagship Dewey Burdock project. And that additional mineralization that we've identified is contiguous to existing ISR resources. In addition, it's within the existing NRC license boundaries. So that provides us with the potential to significantly increase our resource base at Dewey Burdock. And as I said previous, the cost base at Dewey Burdock is first quartile. We're expecting $12.53 cash costs.
Wow.
So that is absolutely sector
How would that
leading.
translate in all in?
All-in costs, we're looking at high 20s, so still,
high 20,
still reasonable within the current economic environment in the uranium space.
Yeah, so you don't need that much uranium price, let's say, rise to be really profitable.
Exactly, and that's again the $27 million capex hurdle is nothing relative to some of these companies in the Athabasca Basin that are going to be substantially north of that.
Okay, let's say for this year, what do you want to achieve then finally?
For this year, I think we're going to update our 43-101 resources and prepare a revised preliminary economic assessment, really expanding the resource base and aiming to improve the economics of the Dewey Burdock deposit, as well as continuing that finalization of the permitting process.
Okay, fantastic. What do you think, how many pounds of uranium you might produce in the future? I know it's a forward-looking statement, but you must have a plan. Do we talk about 500,000, a million? Yeah, we interviewed yesterday Energy Fuels, for example. They said they are now the largest US producer with 650,000 pounds because nobody is there.
Yeah, U.S.
That's
production.
really funny, I must
U.S.
say.
production is, I think it's over a couple million pounds a year right now. But
Yeah.
what we're aiming for is our mine plan is to develop an asset that has a peak production of 1 million pounds a year at Dewey Burdock. So we're comfortable that 1 million pound number is achievable in the foreseeable future, and we think we're well positioned to take advantage of this next upswing in the uranium cycle.
Super. And what might be your initial mine life? What do you think? How many years?
12 years. 12 to 16
but
years,
there's
including
room
the ramp-up phase.
to enlarge it,
and
right?
there's room to grow, and that's really what's exciting about this resource identification that we've went through recently, is that likelihood of expansion of the resource and expanding that mine life and potential to increase the annual production as well.
Okay, fantastic. And when do you think you might be in production? Or could be in production, let's put it that way.
You know, as I said, I think we can be in production to take advantage of this next upswing in the uranium cycle. So
yeah, but it could happen tomorrow, the upswing.
It could happen tomorrow, but we're well positioned for that. So, you know, it's a difficult question to answer because at the end of the day, you know, there's a few variables that drive that. But being in production by 2020 isn't out of the question.
Okay, super. Well, that's quite foreseeable time, I would say.
Yeah,
great.
No, I appreciate that.
Super. Well, thank you very much. Good luck on that, and really, keep it going, because this world needs a lot uranium, because everybody wants to drive a Tesla and a EQ from Mercedes and whatever. So they all need to be electrified and fueled, right?
Absolutely. And 20% of the U.S. grid right now is powered by nuclear. So
exactly.
there's a strong demand for that.
Yeah. Super. Well, Blake, thank you very much, and all the best for that.
Thank you very much for your time. I appreciate
it. Yeah, ladies and gentlemen, it was Blake Steele from Azarga Uranium, and you heard it. A couldn't say new company, but really in the development phase for ISR, which is a very, very standardized mining method for uranium. And what is really important, you are not digging big holes or big mines into the ground. You are injecting a water solution, and you bring out the uranium to the soil, so you are not disturbing really the landscape. You have a very, very small footprint, and I would say $27 million really for a production facility. That's nothing, honestly, in mining. And if they can really prove everything what they want to do now and be in approximately 2 to 3 years in production, very interesting company. Check it out. Thanks for watching us. Bye-bye from Toronto.